One of the questions I get a lot from non-note investors or people in other forms of real estate is that they just don't understand notes. Notes investing is not that difficult. Making money with notes is not that difficult if you think through it from a bank perspective and a bank mindset versus owning the property mindset. So different ways to make money as a note investor is the first thing is you can buy a performing note. You can buy a mortgage, it's performing at a specific rate of return. Either buy it at par, which is the full value of the note because it's at a higher interest rate, like a hard money loan, or you're buying it at a discount and still making a great above average return, whatever that yield is you're looking for, 8, 9, 10, 12, 15% or greater. You can also make money in non-performing notes, which may sound a little counterintuitive because a non-performing note is a note where somebody hasn't paid on their mortgage for a period of time. Well, if you're buying that note, you're buying it at a discount below what's owed. Now, the borrower still owes the full amount. You're buying, let's say the borrower owes 100. Let's say you're buying it at 50 cents on the dollar. And how do you make money buying a non-performing note? Well, A, you either work with the borrower to get them back on track and they start making payments again. And now that non-performing note is a performing note that's spinning off principal and interest payments on a monthly basis, and you're getting a good yield on that. Or if the borrower doesn't or can't make those payments, you can modify it for them or talk about cash for keys where they're deeding the property to you. Now you have an asset. Now you've taken the property back like a deed in lieu. And now you own the property, which is valued more than what you paid for the note. Even if it's only worth 100, you bought that note at 50. Well, guess what? You just now control the asset worth 100 for $50,000. And now you can do whatever you want with that asset. Sell the property, keep it in your portfolio, rent it, owner finance it out. Do whatever you want to with that asset. It's a very, very popular thing. Keep it as a rental, whatever you want. Other ways of making money in notes, you can buy bulk notes and sell those notes off at a profit, which a lot of funds do. You can also be a private investor and just take your own money and lend that out on a monthly return. That's note investing. If you're creating mortgages and lending your money out like on hard money loans or second loans or private lending. A lot of people think about owner financing as a note strategy. It is a strategy, and that's where you're just offering terms up to a seller and they're paying you on a monthly payment with some down payment, stuff like that. If you want to really take your game to the next level, you could create a mortgage fund, and you're buying in bulk and then sharing in profits with your investors, plus charging management fees, acquisition fees, and things like that during the process. One of the most common ways to make money is wholesaling. You can wholesale notes and flip paper, negotiate a note deal at a good price and flip it to another investor for a flat fee, a percentage, anywhere from like a $500 per dog fee to 3 points if it's non-performing, or even a higher wholesale fee if the numbers make sense. So there's multiple ways of making money as a note investor without having to deal with toilets, tents, trash outs, without having to deal with the rehabs, right? Without having to deal with regular community investors who are out there direct mail marketing and things like that.